Who is Abdul Davids?
Okay. I don't know who Abdul Davids is, but I can tell you who Abdul Azeez Davids is.
Sorry, my apologies.
No, it's fine.
Abdul Azeez.
So my full name is Abdul Azeez Davids, and the reason for just a shortening of the name, in my first job, my employer basically kept on referring to me as Aziz, and obviously, as you know, Aziz is one of the attributes or names of Allah.
Sure.
So I said to him, I'd much rather be Abdul than Aziz,
Yes.
and the name sort of stuck. And throughout my working career, that sort of, Now, what complicates things is there are many Abdul Davids in Cape Town, so I'm just one of many, so,
Okay.
which is, I think, a good thing.
Yeah.
And I mean, you alluded to the name Kagiso as well. So I think maybe just talking about that name, because it's not a name that rolls off easily of our tongues.
Yeah.
And in a South African, in a Western Cape context in particular, Kagiso should actually resonate with our Muslim community, because Kagiso actually means peace in the Tswana language. And as we translate peace, I mean, it's Salam or Islam. Islam also means peace.
Sure.
So think of it as Islam Asset Management.
Okay,
Kagiso Asset Management.
that's interesting. That's an interesting way to look at it. I mean, thanks for that rectification that it's actually Abdul Azeez. Very interesting. Zahir, do you got that right? That it's Abdul Azeez Davids?
I had a suspicion, but on the email name I saw Abdul Davids, but be that as maybe Abdul. I think part of what we like to do here on our platform is just maybe introduce where you're from, your background, and how you ended up at Kagiso. I think that will be quite fruitful.
Yeah. I think, I mean, I'm born and bred in Cape Town, and specifically I was actually born in Elsie's River.
Okay.
And my mother always said, you were born in a caravan in Elsie's River, so alhamdulillah. And we relocated to Belhar when I was quite small, and effectively I grew up and was raised in Belhar throughout my life. It's only when I got married that I moved out of Belhar. So went to Belhar High School and went to UCT as well. And initially I wanted to be a chartered accountant. As you know, when you get career guidance at school, that's the first thing they teach you, or try and indoctrinate you. Become an accountant, a lawyer, or a doctor, one of those three. So those are the noble professions in Cape Town. So I knew I couldn't stand the sight of blood, so I'm not a good liar. No offense to the lawyers.
No offense.
But yeah, and I was always good at numbers, I think, and also the easy way out.
That was a natural progression.
It was a natural progression, yeah. At university, I discovered this field of asset management, but I didn't really fully know what that was all about. So in your final year, you get exposed to all of these asset management companies doing recruitment at the university. So I knew I had a liking for it. I knew I wanted to maybe end up there, but I didn't really understand what was going on there. So it's only when I joined Allan Gray in 1998 that I got my first experience to what a she is and what the stock market is.
Wow.
So it was quite a steep learning curve. And initially my role at Allan Gray was centered around maintaining and developing the investment systems. So given my accounting background, and also I had a bit of IT background as well, I set up a lot of the Allan Gray investment systems.
Interesting.
And over time I was there for almost 10 years, and as people left, they asked me to join the investment team, and my career just took off from there in the investments field. The short summary is basically an accountant that grew up in Cape Town, that has got exposure to the financial markets and now manages Sharia funds. Yeah.
So you're proudly from the Cape Flats.
That's right. Born and bred. Yes.
Abdul Azeez, coming from your background, your understanding a bit more about where you're from, I would like to ask you, what are your hobbies?
Very good question. I mean, there's a marathon coming up this weekend, so I'm quite an avid runner. So I'm about to do my second marathon this weekend, and I initially started off cycling. So initially the hobbies was more around trying to stay fit, trying to lose weight. I was quite overweight, so and alhamdulillah, initially the cycling helped a lot with that, but then I found that you need to cycle a lot longer to get the same sort of level of workout. So running gives you a lot more ROE, return on effort, because you're just you bang for buck, especially being a husband, being a father of 3 kids. It
reduces the time as well. You spend out of.
You can go for a half an hour run and get the same results as a 2 or 3 hour cycle. So,
Yes. minus the very expensive cost of what bicycle costs these days.
That's right.
Yeah.
Definitely is.
So you spoke earlier about a natural progression, and sort of latch onto our earlier conversation. You were talking about how did you end up at Kagiso,
Yes.
and the development of the Sharia investment system.
Okay, that's a very good question, because initially my work at Allan Gray, as I said, I didn't know what the stock market was until I joined Allan Gray, and it was quite a fantastic learning curve, because initially I wasn't required to know much, because I was setting up the investment system, but it was more from an accounting point of view. So when some of the analysts left at Allan Gray, this is in the dark days when Allan Gray was a nobody. Nobody really knew Allan Gray, so nobody wanted to work there. So, which is quite ironic, because Allan Gray is one of the most familiar names now in investments in South Africa. So the CIO, or Chief Investment Officer at that time, he asked me to come and see what the investment side is like, and maybe do the CFA, which is a Chartered Financial Analyst sort of program. And I thought, okay, it's nothing to be lost here, so let me do that. And alhamdulillah, it opened up a new field for me in terms of understanding the stock market, getting to know companies. And I found that I think the word passion is maybe overrated, but I really, it resonated strongly with me. And throughout my career, I've always felt that there needs to be, there is a, symbiotic relationship between Islam and investing. Sure. And one of my big sort of projects at Allan Gray was to try and pitch for an Allan Gray Islamic Fund or Equity Fund. And initially, even at that stage, Allan Gray was a fairly sizable company. They were managing over 100 billion in assets. And so I did this whole research project on starting an Allan Gray Islamic Fund. I presented it to the directors, and unfortunately they felt that the market was too small. Sure. But they didn't dismiss me out of hand. They basically said, okay, this is a good idea and we like your approach, but maybe go and look at the Middle East and go study the Middle Eastern market. So they sent me to Egypt. I spent some time in Egypt, looking at the Egyptian market and also some of the other related markets. The challenges, and now this is about 2002, 2003, the challenges in those markets are that, first of all, those markets are not accessible for ordinary investors. So you typically have to go through a convoluted structure to just invest in that market. And then secondly, the Egyptian market in particular, the challenge there was that you had one large asset manager that dominated that market. So anybody coming into that market naturally will be a buyer from that asset manager, because you obviously have buying and selling that happens. So they clearly, that would have resulted in us effectively inflating the performance of the incumbent or the existing asset manager. Sure. So my recommendation was that whilst the market is growing fast, it's got structural issues, and Allan Gray shouldn't really pursue. So this is before the whole Tahrir Square, and I actually spent some time at Tahrir Square back in the day. So I think in hindsight that was the right.
So what year was this approximately?
2002, 2003.
Okay.
So as a result of that, those avenues, either in terms of developing a South African Islamic Equity Fund or developing an Allan Gray Middle East sort of franchise, were effectively shut down. And my burning desire at that stage was still to have a Sharia fund and to offer a product to our Muslim community, because having had the luxury of being exposed to Allan Gray, I think one of the greatest or biggest achievements of Allan Gray is the transparency around client service, the fee structures, the offering to their clients, and that philosophy was basically instilled in me as well. And I think that was
Allan Gray, like you said, came from nothing and rose and really became a significant asset management company in the country.
Yeah, that's right. And a lot of it was built on a genuine desire to see their clients succeed and creating wealth for their clients. And I think all of those principles resonated strongly with me. And as a result, I felt that we need to bring that same concept and same philosophy to our Muslim community. So to answer the question, how did I end up at Kagiso? So in late 2007, Kagiso started to approach me. They were looking for somebody to join the investment team. They were looking to become a lot more active in the market. One of my preconditions was that if I am going to join Kagiso, we should start a Kagiso Islamic Fund. And alhamdulillah, they acceded to my request. And in 2009, July 2009, the Kagiso Islamic Equity Fund was born, We started with 0 assets. And alhamdulillah, today we manage over 2 billion rand of assets in our Sharia funds.
That's brilliant, man, mashallah.
Well done.
So how do you start a fund? I always wanted to ask this question. How do you actually go about from no assets to 200 million?
2 billion.
2 billion. 2 billion,
2
sorry.
billion of assets, yes. It's a lot of sweat, a lot of tears, a lot of heartache.
Who was
late
your first
hours.
investor? Do you know?
I don't know if I'm allowed to. But he's actually a financial advisor in Durban.
Okay.
So I went to go see him. So back in the day, not having a fund, I had to do most of. I don't want to take credit for all of this. We obviously had a big support and support team behind me, but I was closely involved in setting up the fund. We were still using Coronation. Kagiso came out of Coronation.
Yes.
It was basically one of the founding shareholders of Kagiso Asset Management. So we got a lot of input from Coronation in terms of setting up the fund. But I had to write down the business plan, do the feasibility, all of that, and submit the documentation. But the marketing was entirely, Kagiso in terms of us and myself in particular. So I used to plan these trips to Durban and go knock on people's doors and say, we're starting a fund. Would you like to become a seed investor? And I remember the one, I'm not going to mention his name, but I went to his office here. He was basically in Umgeni Road in Durban. And he said to me, I like you. I'll invest in your fund, but I want to be investor number 1. So I said, okay, I promise you, you're going to be investor number 1. So he's the first guy that invested.
For me personally, it took a bit of effort understanding what it is, but I think there's many people out there that really doesn't understand the difference between a conventional and the Sharia.
Okay, so let's take a step back. A fund, what is a fund? And effectively what we do is that, as I've alluded to, and let's focus on the retail market. So somebody that has, a spare 1,000 rand at the end of the month, he can invest at demand. So he would come to an asset manager like ourselves, deposit that money in a trust account. We would take that money and invest it on the JSE, predominantly the Johannesburg Stock Exchange.
Yes.
So a lot of the companies we invest in would be listed companies like, and I'll just mention a few names, companies like Anglo American, Sasol, Vodacom, Telkom, they're all listed as well. And that's effectively, we aggregate all of our individual investors' investments into what they call a collective investment scheme, which is effectively what the unit trust is. And every day, and the great thing about a unit trust is that every day people can see the value of the investment. Because when they invest, they get a statement and that shows them how many units they have. When they take the amount of units they have and they open any business paper or the business section of any paper in Cape Town, they can see what the unit price is. So it's a simple case of taking that unit price, multiplied by the number of units. That is the value of your investment on any particular day.
And for millennials, there's of course applications that they can open and check trends and performances.
They don't read the paper anymore, but you can go online, for example. So there are numerous websites that will have daily prices of all the unit trusts. So it's taking your statement, the number of units that you have, multiplied by the unit price. So to answer the second part of the question, what is a Sharia compliant fund? I think we're all familiar with the principles of Islam in terms of how making salah, paying your zakah, fasting. Similarly, Islam governs it's not just a religion; it's a way of life, and it governs what we can and cannot do. So we are not allowed to consume alcohol. We're not allowed to gamble, for example. Similarly, we're not allowed to invest in those companies that engage in those activities. And fundamentally, Islam, the principle of Islam is underpinned by the prohibition of riba or interest. So we take those principles and develop a framework for a Sharia, a fund that complies with those rules of Sharia. So effectively, it's combining the qualitative aspects in terms of saying, don't invest in businesses that are engaged in alcohol production or gambling, etc., with the quantitative or the numeric aspects of saying that companies that engage in too much lending activity or has too much debt or cash on their balance sheet, to limit or totally eliminate investing in those companies.
So on that one, my understanding is that companies that are too indebted also becomes then of those companies that you would consider not investing in, correct?
That's right. And effectively, the principle of neither borrower nor lender be. So effectively, if you have too much debt, it means you're paying a lot of interest. If you have too much cash, it means you're receiving a lot of interest. So there are financial filters that we apply in terms of saying, we know that anybody that has a bank account and in the fortunate position of having some surplus funds will receive some interest.
Sure.
So, and it's virtually impossible to have a zero sort of tolerance for any interest received or interest paid. So there are cutoffs in terms of those ratios. And the great thing about our process is that it's all automated. So we do all of those screening, both in terms of the qualitative and the quantitative side of things, electronically, and it's done seamlessly in our process. Yes.
That was quite enlightening, Zaid.
No, definitely. And what's more enlightening is going to be the answer to this next question, no doubt. I'm reading in your portfolio here, it says here, we manage funds across the risk spectrum for sophisticated institutional and private investors.
Yes.
Break that down for me in terms of when you say risk spectrum now,
Yes.
when you listen to any news broadcast, you hear medium risk, low risk, high risk.
Yes.
Maybe take us through the types of risk and how it influences your investment strategy.
That's a very good question. As I've alluded to earlier, we've got different types of investors. You get investors that are investing for retirement, for example.
Mm-hmm.
So typically people like yourselves that are still fairly young. So you are
So
looking
we can put
to
our spare $1,000.
you typically, if you're somebody that is maybe just starting to work, for example, they are looking to only retire maybe in 30 or 35 years time. For them, what is critical is that they have sufficient funds at retirement to fund either their lifestyle as they have now, or a better quality of life in 30 to 35 years time.
Sure.
So what's critical there is that they get as much capital growth from their investments as is possible. So to do that, there's typically a trade-off between the amount of return or opportunity that you have and the risk associated with that opportunity. So all that is saying is that somebody that's just starting to work and he's still living with his parents, he can afford to put away 5,000 Rand a month, and he's saving for the long term for 30, 35 years time. His risk tolerance would be a lot higher than somebody that is maybe 55 or 60 that is looking to retire and need to protect what they've built up over 30 years. And effectively need to now live off that amount for the next 10, 15 years, for example. So that opens up the horizon in terms of what type of product you can then invest on those type of profiles. So somebody that's young, that is starting to work, that is not, the money is available, but is only looking to use it in 30 years' time. His risk tolerance in terms of the type of products that we can invest in, and I'll explain what risk really is, is a lot higher than somebody that's closer to retirement. So that's the first aspect. So what is risk? There's two ways of looking at risk. So risk, as we think about it naturally, is something that entails loss. So if you're going to drive a car without a license and you don't know how to drive, the risk is that you make an accident. So the risk is that you either get killed or you lose your car. Similarly, investments, we think the most important risk is the risk of a capital loss. So that 1,000 Rand that you've invested, if we are going to invest it in a reckless manner or in a poor manner, and it results in you losing your 1,000 Rand or losing 200 Rand or 300 Rand from your 1,000 Rand, that is a significant risk. There's also a secondary component of risk, which is basically saying that if you invest in a company and that company, because it's maybe operating in a volatile market or in a market where there's a lot of uncertainty, it is subject to undue volatility in terms of its share price, that is also risk. We think that is a secondary risk because clearly in that volatility that creates opportunity. So, and I'll give you a good example of that. A company like Sasol, for example. We all know Sasol because it's one of the big oil companies in South Africa. We all know it acutely because next month the price of petrol is going to go up and it's going to be the highest ever. So, but similarly, we know that the oil price can be quite volatile.
Yes.
So Sasol benefits from higher oil prices. At lower oil prices, they make less money.
Yes.
But because of that volatility in terms of the oil price, Sasol a year ago the share price was below 300 Rand a share. Today the share price is over 500 Rand a share. But that volatility creates opportunity. So in our funds we bought a lot of Sasol below 300 Rand, and at 500 Rand is probably closer to a fair value. So that's why it's important to distinguish the type of risk that we're talking about. But in a nutshell, those are the two risk elements that we talk about. And effectively what we try and do in terms of profiling our clients and profiling the products is to say, how much of Sasol would I have for a pensioner or somebody close to retirement versus somebody that's just starting out. Somebody just starting out, he can have a lot more hassle in his portfolio versus somebody that's closer to retirement. Never lose sight of who our bosses are.
Sure.
The client is the boss.
Ultimately.
And, I've seen it at other institutions where, that first investor, you're so grateful for him, but when you reach 10 billion, 20 billion, 40 billion in assets or in size, you forget about that first investor.
Yes.
And, you send then other people to do, report backs, etc. So that's something that we quite strong on, is the fact that we never want to lose touch with our investors and our clients. And it speaks to two things. It's first the humility of recognizing that our clients are what makes a business.
Sure.
And then secondly, to not have that arrogance of losing touch with your clients.
Sure.
Especially when things are good and when success is on your doorstep. Because, the market goes through cycles. And typically, a period of prolonged outperformance is inevitably followed by a period of underperformance.
Sure.
And it's in those underperformance periods that, you need to have your investors to have that confidence and trust in you.
Yes.
To say that we've seen this movie before, it will come right, we will stick it out with you.
Sure.
But you can only build up that goodwill if you've done that during the good times, and
Sure.
if you've explained it to them. And I think that's one of the hallmarks of our business.
Zira, I like the ethos of this company then.
No, alhamdulillah. The name itself says it all.
Salam.
Alhamdulillah. But talk about salam, talk about trust and confidence. We know any relationship that is only going to work on those principles.
Yes.
A lot of critique in terms of Sharia or Sharia type investments. Is it Sharia compliant? What mechanisms, maybe take the viewer, the listener, into what mechanisms are in place to ensure that it's Sharia compliant?
Yes. So what we've done is that we've got a very strong Sharia board. And, when we decided on who the members of our Sharia board should be, we've had a couple of principles that guided our decision. Firstly, we wanted to get Sharia scholars that are very strong in their own right. Because you don't want a situation where the fund manager or the company overrides the Sharia board in terms of decision making. So those individuals need to be of strong enough character to stand up
Sure.
to the portfolio manager, to myself, in terms of saying that what you're doing is not compliant. So correct it, for example. That's the first thing. The second thing that we felt very strongly about is that we want our Sharia board to be accessible to our investors. So with that in mind, we've effectively gone for the route of saying that if you look at the three major centers in South Africa, Cape Town, Durban and Johannesburg, we've got a locally based scholar in each of those three regions.
Interesting.
And in Cape Town in particular, we've gone for Sheikh Toa Karan, who's also the mufti of the MJC, a very strong personality, a very erudite scholar, somebody that is very well known, not just locally but internationally as well.
Yes.
So that takes care of the personalities in terms of the Sharia compliant framework. In terms of the process itself, we follow an organization called IOFI. IOFI is the accounting and auditing organization for Islamic financial institutions, so quite a big word. But they produce a handbook for investments, and in there they go in quite a lot of detail in terms of what makes for a compliant sort of investment. And we've adopted those rules and principles in our processes. And I think the third element of this is that, which we feel very strongly about, is that it's one thing to implement that processes. It's another to demonstrate to our clients that these things are compliant.
Sure.
So our process is 100% transparent. Any of our clients or investors can come in at any time and go through our entire portfolio, go through the entire universe of companies that we analyze, and check for themselves that the companies that we analyze, the companies that we invest in, are Sharia compliant. And it's only in that proof of the pudding, as I call it, and people actually physically coming here and looking for themselves, that they will get the comfort. Because it's one thing to allude to Sharia compliancy. There are ways and means for fund managers to, if they wanted to hoodwink the Sharia board, for example. They're not here on a day-to-day basis. They don't really have privy in terms of seeing on a day-to-day basis what's happening. But it's only when you can stand up to that test, that the full glare of the limelight of looking at the transparent sort of processes around your Sharia compliant process, that you can see that in action as well. So that's why those three elements of getting a very strong Sharia board, following the rules, and being consistent in the application of those rules, and then having that third element of transparency to it as well.
Very competitive.
I don't know, bro. Their guys in the office are quite good.